Before we dive in, don't forget to like and subscribe for more stock breakdowns and investment insights every week. Today, we're analyzing Advanced Micro Devices, better known as AMD, one of the most dominant and innovative semiconductor companies in the world. AMD designs high-performance computing and graphics processors used across PCs, gaming consoles, servers, and AI data centers. Over the past decade, AMD has completely transformed its business, rising from near bankruptcy to becoming a top-tier chipmaker under the leadership of CEO Dr. Lisa Su. AMD's business is driven by four major segments. The client segment focuses on CPUs and APUs for desktops and laptops, primarily under the Ryzen brand. The gaming segment includes graphics cards and custom system-on-chips used in consoles like the PlayStation 5 and Xbox. The data center segment, one of the fastest-growing divisions, delivers ePIC server processors and MI300 AI accelerators used in cloud computing and AI workloads. Lastly, the embedded segment, bolstered by the Xilinx acquisition, provides specialized chips for industrial, automotive, and telecommunications use cases. In its most recent earnings report for the second quarter of 2025, AMD reported revenue of $6.57 billion, which was an increase of 12% compared to the same period last year. Earnings per share came in at 84 cents, beating Wall Street expectations. Gross margin was 51%, improving from 50% the year before. The data center segment posted revenue of $2.3 billion, up 25% year over year, driven by strong demand for EPK chips and initial ramp-up of MI300 AI accelerators. The client segment brought in $1.5 billion, roughly flat compared to last year. The gaming segment contributed $1.4 billion, down 4% as console refresh cycles mature. The embedded segment generated $1.3 billion, declining 9% due to macroeconomic weakness in industrial and automotive demand. AMD's MI300 chip sales are accelerating rapidly, with revenue nearly doubling from the first quarter to the second. The data center division continues to be the most exciting and promising growth driver for the company. However, softness in the gaming and embedded markets continues to weigh on total revenue growth. From a technical perspective, AMD stock is currently trading around $170 per share. Over the past 52 weeks, the stock has ranged between $90 and $185. It's trading well above its 200-day moving average of about $140, indicating strong upward momentum. Relative strength index is hovering around 62, suggesting the stock is approaching overbought territory but still has room to move higher. Key support levels are around $160 and $140, while resistance sits near $185, which is also its all-time high. In terms of valuation, AMD is trading at 43 times forward earnings. While that is high compared to historical norms, it is in line with other high-growth AI chip stocks. The price-to-sales ratio stands at 9 times, and the P/G ratio, which adjusts for growth, is about 1.4. Free cash flow yield is roughly 2.1%. The company currently has a market capitalization of approximately $275 billion. Although not cheap, AMD is trading at a premium that reflects strong growth expectations, particularly in AI. From a cash flow and balance sheet perspective, AMD generated $1.1 billion in free cash flow in the second quarter. It has $7.3 billion in cash and only $2.5 billion in debt, giving it a strong net cash position. Capital expenditures are trending higher as the company ramps up manufacturing and R&D for its next-gen chips, especially for AI applications. AMD's competitive position is impressive. It competes directly with Intel in CPUs and with NVIDIA in GPUs and AI accelerators. While it still trails NVIDIA in high-end AI GPU dominance, AMD is making progress with its MI300 series. The company has diversified revenue streams, robust products, and growing partnerships in cloud and hyperscale data centers. Challenges include catching up to NVIDIA's CUDA software ecosystem and defending market share from Intel's aggressive pricing tactics. However, opportunities abound in the booming demand for AI computing, cloud infrastructure, and embedded edge devices. Custom chip deals with companies like Microsoft and Meta could offer long-term upside. Threats include NVIDIA's software dominance, Intel's re-entry into the server market, and broader macroeconomic weakness that could impact consumer demand. Looking at the big picture, AMD has numerous strengths: a highly competitive product lineup, strong leadership under Dr. Lisa Su, and a growing presence in AI and data centers. Weaknesses include limited share in AI GPUs and some softness in non-core segments. Still, the opportunities in AI and edge computing are massive, and AMD is one of only a few companies with the expertise and product lineup to take advantage of it. With a clean balance sheet, strong free cash flow, and accelerating growth in the most critical areas of tech infrastructure, AMD looks poised for further upside. In conclusion, AMD is no longer the underdog in semiconductors. It's now a legitimate powerhouse in CPUs, GPUs, AI accelerators, and embedded systems. While its valuation is high, it reflects strong investor confidence in its growth story. For the short term, we rate AMD a moderate buy. If the company continues to execute in AI and data centers and beats earnings in the next quarter, a breakout past $185 is very possible. For the long term, AMD is a strong buy. Its exposure to AI infrastructure, cloud computing, and edge devices makes it one of the best-positioned semiconductor companies for the next 5 years. If you believe in the future of AI and high-performance computing, AMD deserves a place in your portfolio. Don't forget to like and subscribe for more deep-dive investment breakdowns just like this one.